All right. Hey there. Welcome, everybody. A little bit late start today. The other guys there had some stuff they need to get done, but glad to see y'all checking in. Beards and Bitcoin, episode 14 already. Believe that. 14 weeks. Crazy. Exciting times. We've talked a lot about Bitcoin, going well beyond pricing and whatnot, because that's the goal of what we're doing here, getting you guys to think just beyond price. But yeah, this week we've got Tillman's back with us. Andrew, of course, is here as well. And we're going to talk about a few things. First thing we're going to talk about, I don't know how briefly here, is this idea that North Korea is potentially going, trying to hack, Coinbase and whatnot, as far as getting that ETF goodies, right? But we'll talk about that. The Bitcoin there that's being custodied by Coinbase for all but two of the ETFs out there, and of course, we'll kind of touch on normal September expectations for Bitcoin, and then specifically in election years, and then whatever else we can come up with, you guys. So if you guys will help me kind of welcome back here, we've got Mr. Andrew and Mr. Tillman. Tillman finally back. He was gone a couple of weeks here. How are you gentlemen doing?
Doing great. Good to be back. Long trip.
Fantastic, man. Fantastic. Happy to be here.
I'll tell you, man, everybody loves you guys coming on here and giving your thoughts. So, I think we're doing a good thing here. Mm-hmm. But, so I guess, again, we'll kind of talk about this first thing here. It was September 3rd, I believe, that the FBI posted a public service announcement about the Democratic People's Republic of Korea, North Korea. It says is conducting highly tailored, difficult to detect social engineering campaigns against employees of decentralized finance, cryptocurrency, and similar businesses to deploy malware, steal company cryptocurrency. Let me see here. And basically, they're kind of going, and they go a little bit further. They say North Korean malicious cyber actors conducted research on a variety of targets connected to cryptocurrency exchange-traded funds, ETFs, over the last several months. This research included pre-operational preparations suggesting North Korea actors may attempt malicious cyber activities against companies associated with cryptocurrency ETFs or other cryptocurrency-related financial products. So, obviously, this has kind of been a potential concern for people when we found out Coinbase was basically going to be custodying everybody's ETF Bitcoin, right? Other than what was it, Andrew? It's Fidelity self-custodies, and then
Fidelity handles their own custody, and the Van Eck spot Bitcoin ETF, their custody partner is Gemini.
Gemini, that's right. Okay, yeah. Mm-hmm. So, but everybody else is custody with Coinbase. Now, the interesting thing about Coinbase, from what we know, is they don't actually come from a point of, oh, we're not, are we going to be hacked or are we not going to be hacked? They kind of assume they're going to be hacked at some point. So apparently their security procedures are to compartmentalize it. So, if you get hacked, it isn't like a complete just explosion. You can kind of hopefully, keep it from really kind of railing out of control there. I don't know that I think that people really need to be as concerned about that. Because Coinbase is taking it, with that approach and does take it so seriously. I mean, if we think about it, the other thing they could do is, you can spread it out, right? With crypto, we're always talking about, rather than centralizing, decentralizing everything, right? But especially with ETFs, I think that probably creates like more complexity there. There's more. I think it creates another set of problems as well. What do you think?
I am very surprised that the headlines were what they were. I think it's total FUD. I don't buy any of it, quite honestly. I don't see any validity from a technology perspective. And here's my reasoning for that. Cold storage solves every problem that we're talking about. And I'm shocked if Coinbase isn't using cold storage for the ETF balance. I'm just like, this sounds to me like an uneducated writer that wants to create FUD. Am I saying that North Korea isn't trying to figure out the architecture of the crypto sphere? No, of course they are. but everybody is that's a competitor to us. And Coinbase is kind of the shining example of that. So they're obviously going to, like you said, they're going to get attacked. Um, if cold storage become vulnerable, and you would just migrate the Bitcoin to another network, you'd freeze the last. You'd have a ledger of all of the blocks. No one's going to reverse the ledger, I promise you. So you'd know where the failure point was, and you'd recreate a one-for-one airdrop exchange from previous Bitcoin holder's address to new, and it wouldn't be that big of a deal. You'd be off of the corrupted network, if you will. So let's just say somebody did hack Coinbase. Whatever they didn't have in cold storage, yes, could be quote vulnerable, but they would just freeze them. You can literally earmark those on the blockchain and essentially blacklist them from being off ramp to anywhere while you're doing the investigation. Like this has happened since the origins of Bitcoin, is my point, and it's been handled just like all of the other cases have been handled. So this existential, threat that they're trying to paint as this catastrophic risk that North Korea is going to become Bitcoin's majority holder overnight, it doesn't exist in my
Well,
opinion.
if the FBI would have made a like-minded sound the alarm announcement in 1981, maybe more people would be prone to listen to them. But the trust associated with some of our, governmental entities is fairly limited at this point.
Yeah.
So to Tillman's point, it almost sounds like a lack of knowledge on behalf of whoever made this announcement.
Well,
Um,
it just sounds like a headline, is what it sounds like.
yeah,
And is the FBI investigating North Korea and all of their cyber attacks? Yes,
right.
but they're attacking all sorts of stuff all the
Yeah.
time. The piece that is not that doesn't paint an accurate picture, in my opinion, is that so what? Okay, so yes, we all can agree that North Korea does nefarious things on the web, and they are doing it in all sorts of ways to try to scam people out of their crypto. But the way in which I think people have misconstrued this article into thinking that there's some vulnerability inside of the network itself, and with literally a piece of paper and a pencil, you can create seed phrase and protect your Bitcoin from anything because it's a piece of paper, and so it's not hackable by North
Anecdotally,
Korea.
too, haven't we all kind of moved on from North Korea? Have they done anything in the last like 4 to 6 years that anybody's taken notice of? I thought we were moved on to like
Well,
Russia and
listen,
Ukraine, and
if
you know what I
hacking
mean?
is the topic of conversation, we should be talking about the power grid getting hacked because that's a real vulnerability. That's
Yeah, exactly. That probably a bigger issue, honestly, right?
yeah, Internet of Things and all the open doors. Like, go look at all of the security breaches that have happened in all major retailers, and you will find out that the vast majority of those breaches happened through HVAC control panels
Yeah.
that control the air conditioning through an internet port on the building.
Listen,
this isn't real.
my Nest, my Nest deal, that's an important thing in my life. I get to control how cold it is in my house. Anybody messes with it, I immediately know.
Well, but
I
here's
can
the point.
track it to where and how and who. You know what I mean?
Well, but
I'm willing to
truthfully,
make
here's the point.
compromises. I'm willing to make compromises.
Well,
If
that's
were
you got to just know
millions
what your limit is, right? You got to listen. I'm good for this. I'm willing to take some risk on there.
Yeah. If you want to hack my fridge, go for it. Right?
Oh man, yeah. So I mean, I like this. Again, guys. And this is, I think this is a lot of what we do here, right? We kind of talk about the reality of Bitcoin and
yeah,
not just within the financial system, but itself, and to kind of, because people that are new and coming in, they're going to read that and go, "Holy crap! I got to worry about that. I need to get my money out of the ETFs, or I need to get my money. I need to just go ahead and sell my Bitcoin. I got to sell everything.
Well,
Chicken Little, sky is falling, right?
well, you have 4 huge buzzwords: FBI, North Korea, Coinbase, and Bitcoin. You
Yep.
put those 4 words in any sentence, and you're bound to get a bunch of retweets.
Yeah, for sure. But yeah, so I mean, I like that. I like that we're able to kind of sit up there and say, listen, here's the reality of it. And the fact is, even if Coinbase was to get, really hacked, deeply in there, there's, again, so many layers and so many. I'm not saying it can't happen, but the odds of it even happening are pretty low. Where they get really beyond anything super, super important. And then, like you're saying, I mean, it would be really crazy if they weren't holding that Bitcoin in some kind of, some sort of cold wallet, right? I mean, sitting there in the hot wallet's just accessible by, Joe Blow walking down the street, sees, oh, hey, look, the door's cracked open. Let me come on in there and see what's there, right?
Yeah, when you're talking about being the bank, you have to have the vault, don't you? I mean, and the vault is cold storage. So one would have to assume that they have a very sophisticated triage of cold storage management, is the way that I would assume that they operate. And I would hope they operate as a customer of theirs.
Right.
But, in this day and age, you never know what shortcuts. But again, this doesn't sound like Coinbase is so much more Korea as it pertains to blockchain technology. Like it just doesn't feel real to me. I don't, so what?
Yeah. I've got a comment here. Mark was reading a book, I guess, about called Kings of Crypto by John Roberts, which I guess had a discussion about Coinbase in there. And he says it takes 8 people to come together at one point in time to move their cold storage, at least as part of the book. That's what was divulged. So obviously they're not going to divulge, significant security protocols, whatever in there. But, that makes sense, right? That the whole idea is you've got to have multiple people. If you've got one single, point of failure there, one person kind of thing, it makes it way too easy, right? So, it makes sense that when you're custodying 800 and somewhat thousand Bitcoin, that, little Sammy Shoelicker over there is not going to be the only, requirement to get in, right?
Well, if every ledger or Trezor holder has a more sophisticated security scheme than Coinbase, then we're all screwed.
We're all in trouble anyway, right? I think it goes much deeper than even Bitcoin and crypto and whatever.
Listen, I think you should have Sammy Shoelicker on the show next week. That's what I think. You track that guy down. That would be an interesting thing.
What are you guys thinking with him? Oh man. So hopefully guys, we're helping you guys, if you read that and you freaked out or whatever, hopefully we're helping you understand that it isn't quite the way that it comes out. As most journalism is, it tends to be a bit sensational, because that's what gets you to look. That's what gets you to read. That's what gets you eyeballs.
What gets you to click. Yeah, that's right.
Yeah, that's exactly. Right. So the other thing, of course, that I want to kind of discuss was this fact that, again, September, you guys, TradFi, this, coming in Bitcoin, this, risk assets, September just kind of sucks usually. I know Bitcoin 14 years that we've been doing this, right? And I think it's 1, 2, 3, 4, 5 of them, 5 of the 14 years. So basically a third of the time they've been positive in September. 2 of those times have been alongside the what do you call it? Election. The election. Okay. And so, as a matter of fact, let me see here. In September 2020, that was the last election. That was one time where we were actually down on it. But then 2016 we were up. 2012 we were up as well. 2012 was 22%. Man, I'd like to see a 22% rally here. But the fact is we've dipped here at the beginning of the month. And if this is going to be a positive month, that's most likely the way it works out, right? We kind of dip at the beginning of the month and then rally up through the rest of the month. We had the dip, we did that in August, right? We had the August 5th drop and then rallied up through the end of the month. So I'm not, I don't know about you guys, but I'm not overly, confident it's going to be a terrible, necessarily a terrible September here. I think we've got a good chance it could potentially buck the trend.
Well,
Yeah, I think there's so much chaos in the world that's impossible to predict, right? It's like reading the tea leaves. There's so many huge boulders in the room. Any one of them can crush you at any moment, right? The
Yeah.
election cycle alone and what transpires as both candidates define their relationship with this market. That's a big deal, especially considering how divisive the candidates are and how Bitcoin and Trump have already kind of made their public announcement. So by definition, you would think that the opposition would by nature take an opposing side. And there's, I think, a lot of smart people that I read, the Winklevoss twins being some, that I know they've mentioned that it doesn't look good on the other side. I don't know anything about that. I just know that it's big enough to where it can affect price in a way that's different than what we see. We those are unseen events. Those are variables that are outside of our control. And so it goes back to the fundamental thing we've said from day one is like, okay, are you talking about your trading money? Because yeah, maybe. I mean, if you're feeling squeamish about it, maybe you're on the sidelines. If you're not, maybe you're in and you're thinking that this is exactly the sentiment that typically transpires when a bull run starts
Yeah.
moving. Like, everybody's got their little mojo that they try to throw into it. But at the end of the day, as it pertains to like your core holdings, what are you going to sell into? That isn't a defined loser, right?
Yeah.
Being in an inflationary dollar, in an inflationary environment, and we know interest rates are dropping, which means more, printing press activity. So if you just know that by definition, would you want your entire net worth, or would you want concentration risk in an asset that's a depreciatory asset like an automobile? Like that wouldn't be a smart move. So I think, it's more about this should be the tail, not the dog, in terms of the conversation, because we're at 50s and 60s regularly now. And I would argue, like, when we were in the previous cycle, when we got up to our high, 50 sounded really high.
Yeah.
I don't know if you saw when we dipped to 48, but baby, they didn't even blink about getting it back into the 50s, and not just the 50s, cranked it all the way up to 55 and said, "Oh yeah, we're real comfortable buying here too because we know it's going to end up back." So it
Yeah.
feels different this cycle as it pertains to the floor that we've got. But time will tell. Again, there's so many big boulders in the room. God only knows what's going to happen, but it's a fun time to be alive, and that's why you diversify, because
Yeah.
then you don't get squashed. Then you're not in the room, right?
Well, speaking to your point about, again, are we talking about just trading money here? Are we talking about more along the time, more along the terms of some core holdings? And Fibaswani says, how about sticking to your plan and not following the news and BS? Just a thought. And I think for most people, that's probably some of the most solid advice out there, because we're emotional, right? We're human beings.
Yeah,
Even
the whole negative, sentiment around September is, it's connected a little bit to data, but lies, damn lies, and statistics. So we'll start there, and then it's a narrative that's just driven by media to some extent. They got to have something to talk about. And so any guest that they have on at any time, that's a good place to start. It's September's tough. So what are your ideas for navigating a tough September, right? That's an instant 5-minute spot on whatever channel you watch.
Yep.
So if you're trying to manage your 30-day investment thesis in September, you're already losing. I mean, you're already losing. I mean, that's
well,
just
unless you're doing it for ego and you just want to be right, and make the call.
Fine. Sure. But it's I go back to somebody that I respect, as it relates to just overall investments, a guy like Josh Brown, Almost any type of time or event driven narrative associated with markets, he will revert back to essentially this doesn't matter. Essentially, it doesn't matter. Like over a reasonable enough time frame, the market will simply recoup, recover, and go back to higher highs almost every time. I mean, almost every time. And so that's the narrative that you should be acting upon. The narrative that you should be acting upon is over extended periods of time, whether it's Bitcoin, whether it's the S&P 500, whether it's whatever, there's really not a bad time to buy that particular asset or take a position, right? So whether it's 56 or 53, and yeah, you always want better prices and, a little bit of alpha from an execution standpoint. The reality is that if you're sticking to a plan, and that plan is not, oh no, it's September and everybody says September is bad, so I need to make a lot of changes. That's a recipe for instant problems.
Yeah.
Zoom back
listen,
out.
Just think about the counter mentality that really is. So if you asked, you should go on to Chat GPT if you think AI has any intellect at all, and ask it this question. If you were going to buy anything, would you want to buy when it's at a discount and going down in price, or would you want to buy it at its highest price? The answer is very simple. You should be buying in down months. So the question is, if we're even talking about September being a down month, it's like, oh, okay, it's a down month. Great. Where can I go earn a few extra bucks to take advantage of the discount that I'm expecting in September? That to me is a healthier way to look at things. If you're looking at it as a quick buck, you're going to be right some, and you're going to be wrong some. And when you're right, you're going to convince yourself you're really smart. And when you're wrong, you're going to convince yourself that you're unlucky. And you're going to lose a lot of money doing those two things. And that's like human nature. Just put the cattle in the chute and it goes to the slaughter, because that's human emotion. That's what happens.
Here's an exercise that I guarantee you would make us all laugh. If over the last decade you decided that September's a bad month, and so you sell all of your positions on September 1 and buy them back on October 1, would you meaningfully outperform each year or over that decade everyone else that didn't do that? I would bet that you probably are behind everybody else.
Yep.
Or if you're ahead, it's like by, 41 basis points. So who cares?
But here's the thing that even that analysis won't tell you, is what you felt like when Bitcoin in September was up 22%, and you go, oh man, I don't want to buy 22%. It's got to come down from there. And then you never get your Bitcoin back because you missed the next run. Like you're faced with this emotional crisis every day that is not worth the pain that you're trying to, the upside that you're trying to give for the pain. It's just not you're going to be right some again, and you're going to think you're a genius, and you're going to post it on social media and tell all your friends, look at my timing. I sold it at the beginning. I made an extra 22%. But the one time it bites you, you're going to look back and go, I held that much Bitcoin and I'll never hold it again.
Yeah. And you guys, you brought up a couple of great points. Working backward, what Andrew was saying, which is about this idea of, longer term focused goals, especially, when we're talking about Bitcoin, right? And, with this local kind of pullback, if we were to have one, how much difference does it really make in the grand scheme of things? I think that's one thing that definitely people should be focused on. The other one being what Tillman was saying there, when we're looking at, you should be, your mindset should be to buy at the discount, which is absolutely 180 degrees different from the way most people come in the market, right? Most people are looking at, well, I want to buy when I feel like it's going higher versus, and then sell, when it drops when it drops and I sell it, I want to make sure that I'm not getting too much further down. But at the end of the day, what we find out as traders and investors is that your entry is actually the least important of your entry, your risk management, and your exit. Your risk management and your exit are infinitely more important than your entry, because if you have a bad entry, your exit, a good exit's going to keep you from losing like a ridiculous amount of money and, really just screwing up. If you have a good entry, your exit is going to be, is going to make your profit even better. So, in terms of what Tillman's talking about here, where if we have, if you're thinking, if you're not thinking, oh my God, I should be buying at a discount, you're missing the point, right? Because you're buying at that discount to set you up for that, but you're not trying to exit at that discount. So there, your exit becomes important. Where is your exit, right? The entry, sure, you're thinking in terms of entry at a discount, but really what leads to that? It's that exit prior to that discount, right? Everybody's trying to get, but they don't ever do it at the top. They always do it after it's already pulling back. And so what happens for most people is they end up selling at the lows.
It's a simple equation. Bitcoin's in the center of the stadium. They're the football game. Okay. If the football game's going really well and it's a tight game and the crowd's into it, tickets are at a premium.
Yeah.
Everybody wants in the stadium. You got people on the street that are willing to literally wait until the last breath to sell it at the premium because they know what they've got, right?
Yep.
Versus you go into a stadium where there's two crummy teams that are playing. No one wants the tickets. They're giving them away to charities. They're trying to get just people in the seats. Those are the two extremes, okay? So when you're looking at the price, you're looking at how many people want to leave the stadium versus how many people want to get into the stadium. And you want to buy your tickets when more people are leaving the stadium than getting in the stadium, which means price is falling on the tickets. That's when you would buy the tickets. I took my wife to Celine Dion several years ago, a long time ago, actually, but it feels like yesterday. And she's a big fan of hers. And, the tickets were outrageous. It was the first time I had ever even seen tickets that could be this expensive. And I'm just going, this is a ripoff, And, but you know what? That many people were willing to pay it and more. And so the market demand is what you're playing against. And so when you go, yeah, September's a down month. Oh, great. That means people are leaving the stadium. That means there's a surplus of tickets on the street that I can scalp and get into the stadium before everybody realizes that the game's hot again and they want to be in the stadium with me. So, I think that this you got to look at the markets as capital flowing in and out of things. And when capital is flowing out of Bitcoin, it means the price is dropping. That means the tickets are going down in price. And if you're a big football fan and you want season tickets, that's the time to accumulate the tickets for the rest of the season, right? Simple football poor man's analogy, but that's, it's really
it's a great analogy. No, it really is. Again, and I think you really summed it up there well when you said, hey, listen, if you want season tickets and the team's been doing poorly, and so people have been not, less and less interested, and somebody has maybe season tickets, decide, man, screw this year. I'm just going to try and get out break even or less on these tickets. And you jump in there and you really believe in the team and you just enjoy watching them and you think they're going to do something. That's the time you're buying. I mean, I think it's crazy that societally that we tend to put more value on the things as they continue to rise in price. We may not have thought about.
But that's the reason why we go to Vegas, right?
Yeah.
We like to feed dopamine releases.
Yes.
And that is a dopamine release. When you're riding the price, and why do people play penny stocks? Why do people play crypto, kind of the altcoin thing? They love that release, right? That's a roller coaster that's fun to ride. And so it just depends on, you being honest with yourself about why you're there is what's going to keep you out of trouble, in my opinion. But
100%. You have to be on. I talk about this so much because, we teach traders day in and day out. And one of the things I always talk about is you got to understand who you are as a trader or investor. You got to understand where you currently sit, wealth and financial wise, your short, mid, and long-term goals for both financial and wealth. You have to understand and every one of these questions, you absolutely have to be 100% honest with yourself, because as human beings, we really make a living out of lying to ourselves. We make a mistake. We're like, it really wasn't that bad. Meanwhile, the building's on fire behind us, right?
Or I'm paying for an education.
Yeah,
it's worth it. Just
we do this, right? And if we do good, if we do something that's decent, we're like, oh man, it's this great, fantastic. We're so much better, right? But we lie to ourselves as human beings. And this is what we do day in and day out. But you can't do that for this. You have to be honest with yourself. Here's where I am financially. Here's where I am wealth-wise. Here's where I want to go short, mid, long term. Here is how much risk I am honestly willing to take. Most people they're never honest with themselves about this. Me personally, I'm a lot more risk adverse than most people. So, me just getting into Bitcoin and crypto back in 2017 was already stepping a bit further out of my comfort zone as far as risk goes. But, when I'm in the trade, when I'm in the investing, it's all about focusing on how, what my risk tolerance really is. And because I've been doing this so long, I've been honest with myself, not at first, like most people, lie to myself at first, lost a lot of money lying to myself. But once you figure it out, what that does is it allows you to then understand, okay, well, how should I approach this asset class? If I'm trading it, if I'm investing it, if I understand what my goals are and where I am, if I understand, I'm honest with myself about my risk tolerance, if I understand and I'm honest with myself about how many hours a day or how many days a week or what days I can actually have time to focus on trading, and then of that, how much time I actually really want to spend doing it. I may not want to spend all that time that I have to do it. Well, doing all that just allows you to create a system for yourself.
Let's just say you nail all those. There's one more that I think is the biggest overlooked one that hurts people the most, which is, how much do I think about losing when I lose?
Yes.
And man, if it eats you up when you lose and you can't put it to rest and you can't just let it go, there's very, very few things that are worth sacrificing that peace within your, headspace. So it's like one of those things, you got to be realistic about the lifestyle that you want to live. And I've been, I like the steep learning curve. I like the waking up in the middle of the night to check prices overseas. Like, I've been that person, but the older I get, the less I want to be that person. And so, it's like, even that, I'm making decisions now that are different than I would have made 5-10 years ago, because I'm in a different stage of life. And that's a part of growth, is like realizing where you are and what you want. Because there's some things, it's just not worth it. It's just not worth it.
Again, man, you bring up a great point, because it's another thing I often tell, young traders that are coming into TWC, or even that just, talk to me on social media or whatever. And I let them know, they're all like, yeah, I want to sit here 24/7 and watch the charts, and I'll do it. I said, yeah, when I first started, it was exciting to do that. And it was great. The adrenaline, it's like, wow, so much future out there. But then as I've done this decade after decade, it's gotten this point where, like you said, dude, I do not feel like sitting in front of the charts 24/7 anymore. I want to find a trade that's going to work, more likely than not going to work out for me, and not have to worry about it. And I can go on my life and do my other stuff. But most people won't get that unless they've been able to be successful in the market for a while, so that they get to that point, because otherwise you're on that hamster wheel, just continuing, it's like, I'll be honest with you. I can't imagine having started out trading in crypto. The closest I've ever had prior to crypto obviously was Forex, right? Forex, you're open Sunday evening until, Friday afternoon, but you still had the weekend generally to take a break. You could try and, do the overnight. Agent sessions aren't usually that fun, but if you wanted to, it was there 24/7, more or less. or 24.5 or whatever, 5.5. But man, crypto, these guys coming into crypto, and
You can only do it, and I can speak from personal experience for about 2 years,
yeah,
and you're just fried. You can't the sleep patterns because most of the movements happen overnight, and it's like yeah. So you finding your peace with what you
yeah,
want, and being willing to walk away, even if you're going to make money, right? It is a lot of life, in my opinion, regardless of whether it's trading or taking a job that requires you to do something that is against kind of what you want from a time and freedom perspective. There's this sacrifice that that comes with high risk, and when you're trading, it's a zero sum game. The only
yeah,
way you win is by creating a loser. And that's a hard concept for some people to even understand. But when you do understand it, you start to think to yourself, huh, if the only way that there's liquidity on the other side of the trade to create space for me to make money, it means I have to be moving counter to that liquidity,
yeah,
which is not a fun place to be, because
right,
it means you're out on an island doing stuff that nobody else is doing.
yeah.
And that's how you make the big bucks. And if you look at, like, what's the guy, the GameStop guy that just has such a huge following,
Oh, Roaring Kitty.
Roy and Kitty, right? How crazy was it to hear what his position was?
Yeah,
But that's what makes him Roaring Kitty, is getting ahead of the entire crowd
yeah,
and taking bets that don't always pay off, and you lose $1 billion like he
yeah,
did. But guess what? You don't make the type of money he's made without taking that risk. And
yeah,
some people,
exactly.
like, if you can sit there and say, like, that's the life I want, and you have a wife and kids that want to go on that roller coaster ride with you, then more power to you. Grab the bull and ride it bareback, baby, because that's what the markets will give you.
No, yeah, and that's a great point. And just to add on to what you're saying there, one thing, guys, we're not saying be contrarian just to be contrarian. I see a lot of this in social media. People out there, oh, I'm a contrarian trader or whatever. Everybody says this, I'm going to do this. Well, first of all, it's rarely everybody. It's usually just their feed. And remember, your feeds in social media are curated to you by the algorithm. It shows you what it figures that it thinks you want to see. So you got to be really careful when you're talking about sentiment in regards to just your feed.
Well,
There are
let's
better ways
stop
to
right
look
there
at
and
it.
say, like, you have to ask yourself, where did I get this idea?
Yeah.
Like, what did it come from? My origination? Like, did I spot something that my brain is telling me is an opportunity, or did someone feed me something that they want me to perceive
Yes.
as an opportunity? That
Yeah.
is a different equation.
Yeah. And if you're doing the latter, guess what? You're being contrarian, ain't going to work. You're going to
Yeah.
buy and it's going to keep going lower. If you do the former though, and you're finding real legitimate reason, I mean, not just this kind of touchy feely thing of why price has to, do the other thing, right? But if you've done that, then you've got much more chance of being correct. And that's where when you talk about buy when there's blood in the street, especially if it's yours, that's what it's referring to. Not just because price goes down, but where is price in its downtrend in relation to where you should be paying attention.
Well,
Yeah.
and whether the more violent that is, the riskier it becomes. There's
Yeah.
still a risk equation to doing this, even if you're scaling in good capital to a good investment. There's still a lot of risk. For
Always.
example, there's an opportunity that presented itself that I saw. I didn't participate. uh, a lot of people made a lot of money participating. But remember when FTX deal fell
Yep.
out and Solana crashed? What
Yep.
did it get down to? $13?
It's nine
Like
nine bucks.
$9?
Yeah.
That there was an opportunity, a case in point example of what we were talking about here, where
Yeah.
you're going, man, everybody's selling, and they're not selling. It looks very emotional. It looks
Yeah.
like, yeah, they're scared they're losing their house selling.
Yep.
When you see that type of thing, you don't need to know anything about Solana or anything. Now, granted, the bigger the downswing, the bigger the risk, because they could be going down because there's fraud at the highest level of the company. The technology's bad at its core. Like, there could be existential, but if you survive that, you're going to capture the delta of those emotional sellers. And
Yeah.
so therein lies the catch 22 of like, man, oh, do I want to touch this with a 10-foot pole? And sometimes it's just not worth the stomach ache, is the point,
Yeah.
and
But it is able to be done. I've got Mark here. He's with us over at the Trading Academy. But he mentions that when Solana was down there at that $9 area, I still remember today. That was December 30th of 2022 there, and I was on the Wendy O show, and I had said, man, I said, you know what? And I brought up the chart and I said, I believe this is a good buy here. Initial quick target is like that $15. If we hit that, we're looking at $30. And this was just the start, right? Man, I got so much hate. Everybody was, like you were saying, very emotional, very much, oh, it's going to zero. And
well, I saw that. This is why I brought it up, because I watched that and I said to myself, oh man, he's probably right, but I hate the tech so much. And it was my emotion. It was like me. I just couldn't stand. I couldn't bring myself to look in my wallet and see that being held. And you know what? What a foolish thing. I mean, it would, like the guy said, it was a good call.
Yeah, and it's it's not anything other here than just to say, listen, it is possible out there, but even it's still, even for me, I've been doing this a long time, but I'm making this very public call on a very public channel with a lot of viewers, and it was similar to when I was talking about the DXY at around the the 88, 89 area, talking about that most likely being a bottom and a rally to 114 to 115, which we got right. But man, you still got to step out there and you still got to do it. And even if you have conviction in it, especially with social media, you're going to get a lot of flack if you're vocal about it. On both those things, I went on many shows afterward talking about, yeah, I still believe this guy, still believe there. And at some point they go a little sideways. They went up and pulled back, and everybody's still very bearish. And if you don't have the experience, and even when you have the experience, it's still a bit of, it's not this simple. I don't want you guys to think that, hey, you can do this 30 years and nothing bothers you. No, you still have emotion. You are still going to feel that push and pull of emotion, especially, when you're getting it a lot of, here these days on social media. But you have to trust in what you do and your risk management, and that you're, really looking at this potentially to be correct rather than hoping it's correct. But, again, at both those points, very few people were able to pull the trigger at those points. And that will forever be the case. But it wasn't because they had, it wasn't because they were going down that I said, hey, listen, this looks like the point to buy. It looks like this point. There was an analysis done to it within those areas that made them more likely than not to be correct.
Well, if I was smart and if I had thought about it long and hard enough, you know what would have gotten me to buy?
What's that?
Just how many VCs are backing it. It's too big to fail. Like, there's no way that all those people weren't going to pump a bunch more money into it and buy it up at the bottom.
Yeah.
And that, but see, those are the boulders in the room. Like,
and they all the time, right? No matter how long you're in, you've been doing this a long time as well. And, we're both speaking to it because there's, young traders here, people who are, I say young traders, not just young in age, but just young in experience with markets and trading. And we're trying to be real with you guys here. It doesn't go away. Anybody that tells you this stuff goes away and it's always simple after you've been doing it 10 years or something, they are lying to you.
What goes away is your ability to forget how much money you would have made. You stop chasing the rabbits. Yes. You don't care. There's a new train leaving the station every day. I don't look back on the Solana deal and be like, God, I'm an idiot. I don't even have any emotion towards it. Yeah. I just look at it as like, I didn't didn't follow my own rules, and that is a lesson that cost me. And going forward, you hope to not recreate those same lessons again. But it's a psychological battle. When it dropped, I remember I started paying attention, thinking at 13, and I was like, man, 13, this could be a 10xer
Like,
pretty
yeah.
easily. Yeah, I mean, I just, you start convincing yourself. But
Yeah.
then it popped, and it popped to like 20, 25, 30. And I thought to myself, well, there's the dead cat bounce before this thing goes to the
Yep.
seventh circle of hell. And I convinced myself out of it. And
Yep.
that's the point, though, is you cannot be, if you really believe in the fundamental asset. And this is where you start really bridging the gap between investing and trading, right?
Yeah.
Because Warren Buffett, he has a very tight circle of criteria that he has to have for it to warrant his investment, right? It has to be income producing. Like that, he won't touch anything that doesn't produce a yield based upon the very nature of its need itself: shelter, water, food, those types of things. So if you're going to live within that circle, you're going to say no to the vast majority of things, right?
Yep.
So you have to decide what your circle is, and you have to have conviction over that, and you have to live and die on the sword that circle brings you. And some circles are very wide. You'll play anything, and you like the thrill of the hunt, and it doesn't matter if you lose 10, as long as the 11th pays for 10 more tries, then you're good to go. Like, that may be the type of person you are. But again, back to your point, you got to know who you are and know what you want. And I will tell you that there are things that Bitcoin has been able to do that, in my mind, take it into a category that is very different than any other asset. And here's the category. 1 to 2% of daily volume in the stock market is your paycheck buying your retirement.
Yeah.
And you're not thinking about what you're buying. It's just curse splot, curse splot, curse splot, curse splot. That drives price up. In when you couple that with inflation, price is going to increase on assets based in US dollars that have a publicly traded presence. By very definition, that's going to take place. And so when you're talking about Bitcoin now being injected into the registered investment advisor funds, and you start looking at now it being systematically added at a retirement level, you're talking about a rising tide that, we can sit around and hypothesize about whether September is going to be up or down. Who cares? The water is coming in from the typhoon, and the ships are going to go higher, in my opinion. Like that's the way I look at it.
Yeah, no, exactly. And again, again, you're bringing up another great point. I hope people are paying attention. I want to keep repeating it so in case they missed it. But it's that old adage that once you've been in the markets for a while, you begin to understand that there's always opportunity.
Yeah.
Missing something is not the end all be all. If you've been in the markets since the 90s, you may have missed Amazon. You may have missed Apple. You may have missed Domino's Pizza, which, by the way, did extremely well, through the 2000s. But, from the 2000s on up till now. But it's not about the ones you miss. It's about the ones you get. And if you at least understand that, listen, there's always opportunity out there, then as a trader or investor, especially in a market that's open 24/7, you can start getting some rest. You can start sleeping. You're not getting woken up at 3 a.m. because the chart's doing something. You don't worry about it. Whatever happens when you're not at the chart, it happens when you're not at the chart. The odds are you would have missed the move. And here's the biggest thing with Bitcoin. I think here's the biggest thing that people miss with Bitcoin is they're always focused on trying to get in that one move. But the odds are either they're going to miss the move or they'll get in at some point and they'll get out way too early. And, if they just focused on, if they're trading on the hours while they're, their business hours when they're trading, and don't worry about what happens afterward, your life becomes worth doing it. as somebody who's done this for so long, I see a lot of people get caught up in that, where trading becomes the only thing in their life, and they have families or they have other
Balance
responsibilities, and
is
it all loses out to trading.
Yeah. Trading will become an addiction if you're not
Yes.
careful,
Yeah.
especially in the day and age where there's a market open 24/7, and you start selling yourself these grandiose plans.
Yeah.
But here's what you're really doing, and you're not realizing it. You're working for your money instead of having your money work for you.
There
And
you go.
having your money work for you is how all the smart people do it. And I'm not a smart guy, but I know who is. And when I look at what they do, they love interest, and they
Yeah.
love compounding interest,
Yeah.
and they will take that with with a high degree of certainty at a low rate compared to chasing yield at a low degree of certainty. They want the compounding year to year. And so when you're talking about allocation, that's where this becomes really, really important, because I understand wanting to chase the adrenaline rush.
Yeah.
I'm an ex-football player. I love the adrenaline rush. That's fun. But chase it with a limited purse. Chase it. If you want to do a 10,000 to $1 million challenge, great. But don't reload the cannon when you blow the first 10,000.
Yeah. Yeah.
Realize you were wrong and walk. And then that hopefully will be the lesson where you go, you know what? I don't like to lose 10,000 bucks. That doesn't feel good. I probably should not try that cannon again. That's a long ball that's like no different than, I'm a poker player. I love poker, but if I was down to paying my kids tuition or entering into the World Series of Poker, hopefully I'm not delusional enough to convince myself that there's a high probability that I'm going to walk out of there with $1 million+.
Yeah.
Hopefully I have the presence of mind to go, you know what, I'm about to blow this 10 grand, and I'm gonna have a lot of real consequences to blowing this 10 grand. So different strategy: pause, stop, not working for me. So it's really about like not rushing based upon
Yeah.
your greed or your fear to do anything in life, right?
Yeah.
Right.
Yeah. And again, folks, I've been saying this a very long time. I talk to people who sometimes say, well, I need to make this money to pay my rent or to pay my bills or whatever. If you're in that situation, I repeat, do not put your money in the market. Figure out another way, because you will lose your money there. I can all but guarantee that you will absolutely lose that money, and you'll lose it quick and hard, because your emotions are at that point where, oh my God, I need to do this, which means you're going to be looking at situations and you're not going to be very clear in your head. And again, we're really good at lying to ourselves. There will be a potential setup and you'll be like, oh my God, this looks amazing. I'm going to triple my money here. And the problem is you don't wait for any kind of confirmation. It just was that momentary look. It ends up bouncing slightly and then continues to drop lower. And that happens. And many of y'all can, if you're honest, will probably admit that it's happened to you many, many times in the markets, especially in the beginning. You'll be there, it'll drop, and you'll be, oh my God, this is perfect. It's got to go up from here. And then what does it do? It does this like little 0.5% bounce or something, and then just shreds on down lower. And you're within 30 minutes or whatever, you're already out. So don't look at the markets as a get rich quick thing, guys. Trading, investing, they're marathons, not sprints. They require a bigger overall picture. What is it that you're trying to accomplish specifically? You have to be specific, not just in trading, but in life. You need to have a plan. You need to have goals. You need to be as specific as possible, because then that allows you to then get into, what are my steps along the way? What things do I have to do? How do I have to do them to get where I want to get? Because most of us, we're just winging it.
Well, and here's the thing to practice with limited exposure. You ready for this? And most people don't think like this, but here's a tip. And I'm doing this with my kids when I teach them to trade. So, Chris, you're a trader. You come to me, and let's say you're either a seasoned trader or you're a novice, but you have a premise. And your premise is this setup is going to make me money. I have an advantage here. So you as a pro tell me, you know what, I've got an advantage here, and I look at all this other credentials I've got. You should believe me. This is an incredible setup, and this is a huge market advantage. Well, guess what? Time will tell.
Mhm.
You know, there's a lot of data points to accumulate
Yeah.
to prove that theory. So why wouldn't I, as a friend to you, go, you know what, Chris, I think you're right. Me and you are gonna put a wager. You're gonna paper trade this strategy for the next 6 months. If it hits the criteria you've set out for it to hit, non-emotional, it has to hit this profit target, has to hit this winning percentage rate. If it hits those two things, I'm going to pay you $1,000. You win the bet. You've limited your exposure to $1,000. You're playing for
Yeah.
real money. You've injected pride into it. You want to prove that your model's correct, but at the same time, you're not unaccountable to being in a losing position and convincing yourself that it's going to come back, and then it doesn't come back and you go, oh my. And I have friends, honestly, that are pro traders that trade every day all day long, and they will get into a position, it will go against them violently in the first, like you said, it'll just, boom, and they cannot part with the position. they
Yeah.
they just ride it into the depths of hell, and then they always sell in the puke out moment
Yep.
when they go, oh god, I'm down 75%. Do I want just to have 25% left? And they vomit it, and then boom, it goes right
There you
back up.
go. Yeah.
And that is everyone's experience. So
Yeah.
you have to start to think that the market's designed to create those experiences, and the
Yeah.
people who win don't fall for it. They don't chase the falling knife. They
Yeah.
don't think that the train never leaves the station. The real smart guys go, oh, I was wrong. Exit. What am I doing for dinner tonight? I'm gonna go out.
Yeah.
Okay, yeah. And it's just gone. It's
Mhm.
never to come into their psyche again. And they go back to the drawing board the next day and they try again. And if you do that, you're gonna save yourself a lot of turmoil. I mean, the turmoil of not knowing when to sell when you're down big. I don't wish that upon anybody. It's
Oh,
horrible.
it's
It's a
awful.
miserable feeling.
Yeah, and I think I know I've done that. Too many times to mention. Back when I first started, I know you've done that, and I think anybody that's listening in that's in the market, if they say they haven't, I would be willing to bet that they're lying.
Just
And
hang
I'm not,
around
and
for a
I'm not
little
a
bit. It gets
gambler.
warm.
What was that?
Yeah. I said just hang around for a little bit. It'll happen.
Yeah, it'll happen,
It's
right?
part of the
Uh,
markets. Yeah.
Yeah, and these are the realities of trading, though, guys. This is, again, the one thing I do, and it turns a lot of people off, is I'm honest about trading here. I'm honest about the things we go through, and I'm honest about it because they're things that I myself have gone through many times before. It's things that I've talked to an untold number of traders over the last 30 years that have gone through as well, and so you know you can come in and think that you're that much more special, you've got some particular edge, and maybe you do to an extent, but the odds are always and forever that you're going to go through these experiences. The key is to have somebody say, listen, these are the experiences, watch for them, because you don't want to go through them more times than you have to. I mean, ideally, we would make one bad decision as human beings and we would learn from it and we'd be good to go from that point on, never make that particular bad decision again, right? But let's face it, we're human beings. It's not enough just to, beat ourselves once. We want to keep going back to make sure we really learn that lesson, right? Once, 3 times, 5 times, 10 times. Some people continue to repeat the same mistake, not just in trading, but whatever else in life that they're doing, over and over and over again, especially when it comes in terms of relationships. We'll get there. We'll date a specific type of person, and that'll end terribly for us, and we'll be miserable. We were miserable in it. We were miserable coming out of it. What do? We go on and date the next same person that looks just like that, and then we
Well,
do it
and you
again,
have to
right?
ask yourself, when that's happening, what dopamine release am I being fed that keeps me here? Because
Yeah.
it's happening. That's the dopamine release.
Yep.
So that if I'm going to the casino every time, if you ever talk to somebody who has a gambling problem, they will tell you they'll brag about all the big wins. Oh, I hit this on this. I hit this. And then when you go, well, are you up or down overall? Oh, I don't know. Well, I know. Trust me, I know, because those casinos are smarter than you. And guess what? They know.
Yep.
Those casinos are accounting for their profits. So the only one in the equation here that isn't accounting for your overarching success or failure is you, which if you're not accounting for it, you're failing, I can assure you. And so it's like that with trading. Don't trade just so that you can feel good about yourself. That it will make you feel good. It really will. Like if you can if you go willy-nilly right now, I could open up any chart. I could watch it for 5 minutes. I could come up with an opinion.
Yeah.
And depending upon how delusional I am in myself at that very moment, I'm going to convince myself to order number, put in the shares, and I'm going to convince myself one way or another.
Bye.
So yeah, exactly. And so I know that about myself. And so what does that mean? Well, it means that I don't just peruse charts looking for setups. I go into the day with the setup that has to happen in order for me to qualify myself entering in a trade. And then I know if it doesn't happen, I can just go, well, it didn't happen today. There's no emotion about it. It's just on to the next time. Whereas if I'm not doing that, I'm looking for a trade. I'm actually looking for disaster is the point. And so going into a day not knowing what you're going to do, it's like going down to the kitchen at midnight, not knowing what you're going to eat. I promise it's going to be bad for you. It's going to make you feel good in the moment. You're going to wake up in the morning going, oh God, why do I do this to myself?
Yeah, you're so correct, man. I've been posting lately this idea that it's about systems, setups, and proper risk management, right? The idea is there should be a setup you're looking for, because like you said, if you're looking for something, as I continue to mention to people, you're going to find what you're looking for. That doesn't mean you're going to be correct, but you're going to find whatever you're looking for. And so if you don't approach the markets with a particular type of setup or a few different setups specifically that you're looking for, you're going to look to find something. And the problem with that is that you're chasing rather than setting the terms to begin with. And again, as human beings, we're really
and a lot of times, well, and for a lot of
Mm-hmm.
times, you're just not looking at the full picture. Like, how many times does a 15-minute chart look beautiful, but you haven't even looked at the hour chart or the daily chart, and you're literally bumping up on resistance that's been set up over a 4 or 5 month period. And because I'm just wanting to impulse buy on the 15-minute chart because I'm a genius and look at this setup, it just leads to bad decisions is the point.
Yeah, and bad decisions lead to lost money, folks. Emotional trading leads to lost money. Do not forget that, all right? But yeah, I think that kind of takes us to the end of the show here, man. I loved, I love this thing we had here at the end of the show where we're kind of talking a lot about trading and the mental side of it, the emotional side of it. And hopefully people are paying attention. Again, these are experiences we've had for the years that we've been doing this, that we're just trying to share. At the end of the day, guys, you're going to do what you're going to do. We're just trying to give you some of that stuff that we didn't actually have access to back when we started. Especially me, Lord knows, didn't have all the social media and everything. So
these are important things to tell yourself every day at every level. Like this is a good reminder for us. The call to be emotional never stops, right? You always want it.
Yeah, absolutely not. Never. Don't forget, guys, Tillman and Andrew, they've got Arch Public, so you can get to archpublic.com and check them out with their algorithmic strategies that they have there. They've got different levels depending on, how well footed you are in the world. You can get started inexpensively, and if you've of better means, there is more available. So check it out. They got something for everybody out there. You can join us over at TexasWestCapital.com. By the way, today, I didn't mention this, today is actually the 7-year anniversary of TWC. So
wow, that's huge.
2017, September 11th, 2017 is when we started. And so something we're actually going to do, we've been very focused on trader education all these years, and we still are, but we kind of sit out there going, well, what else could we give people that they've been asking about? And so we're about to launch something we're going to call TWC Traders Club. And what you're going to do there is you're going to get access to my personal trades and a couple of our students who have done exceptionally well. And they've just kind of figured it out, right? They've gone through what we taught over here and they figured it out. And you're going to get access to all our personal trades. We'll tell you, listen, these are the setup we're looking at. This is where we're entering, our exit, our stop loss. As we get to the point where we enter, we'll post, hey, we're entering here. If we change anything along the way, you're going to know. Let's say, we're heading up, we haven't hit the take profit, and we decide that the structure of the market has changed beyond what we were thinking was going to happen. And we feel like, hey, listen, we want to go ahead and lock in profits rather than rather than just letting it go out there, right? Again, this is that experience coming in, and we'll let you know. So we're going to launch that. I think we're probably going to launch that next Tuesday. It's going to be pretty inexpensive.
Well, I mean, what a great thing to see somebody drive the car, with their own money and with their own, that's invaluable, because you're getting to see the roller coaster, and you're getting to see somebody manage it, and doing that from afar will give you such a great vantage point when you're in the hot seat and you know what the G-forces feel like, and you're going, man, okay, so this is how you do it. You exit quickly, or whatever the tool is.
Yeah. I'm awesome. Excited about it. For me personally, I've done pretty much most of the work until this last year, a little bit more, where I finally started to bring other people in. We've got Fibaswani in here. Again, he just, right as I said that, he posted that right there. He says, TWC is a great place to learn, why I partnered up. But, so we brought him in there. And then my goal has always been to get to the point where we can showcase our traders and kind of really, help them grow and help them get their following growing and whatnot, because they've paid attention, they've done things they need to do, and it's become profitable for them. Because I can sit here and say it all day long. I've been doing it 30 years. But at the end of the day, does it work for other people? And, we're about to show you that it does. So it's exciting, but, these guys are great here. Tillman and Andrew over there again, thearchpublic.com. Is it thearchpublic or archpublic.com?
The Archpublic.
Okay. Thearchpublic.com there. Follow him. Tillman is OL Texas 70. God, I'm going to screw it up.
Texas OL 61.
Jeez, oh, Liz. And I've been doing it right. You weren't here the last few weeks. I've been getting it spot on, just perfectly. And then, we look like we lost. Oh, there he is. There's Tillman. Anyway, and you can follow Andrew at AP_abacus. What is your company's at on Twitter?
Try Archpublic.
Try Archpublic. Okay, so at Try Archpublic will get you to their company page there as well, guys. But man, hopefully, we've done well by you today. Again, the idea here is just to kind of bring this experience that we have in these different areas, that Tillman, myself, and Andrew have, and to kind of hopefully get you thinking a little bit deeper about Bitcoin, and particular today, I guess, getting you thinking a little bit deeper about the way you approach markets and understanding the things that you're going to come against. And you're going to make mistakes, guys. You're going to make mistakes. There is no two ways about it.
And if your emotions don't get you, North Korea will. So it's all right. We're all good.
And on that, I think that's what we're good there. North Korea is going to get you, huh? All right, guys. As always, remember, the only thing you control is how much you lose. Please follow these guys. Follow me. Hit the thumbs up. Hit the like. Follow the channel. Do all that great stuff. Check us out at our website. Ask us questions, guys. We'll be glad to answer any questions you have, especially in regards to what we do, or, our thoughts on markets and stuff. But at the end of the day, guess what, folks? You have to learn these things. Nobody here is going to take the responsibility from you. You have to do it. At the end of the day, you're the one, making those moves in the market, or allocating money to a system to make those moves in the market. So, the onus falls on you to make sure that you're doing your homework, you're understanding what you're doing. Okay. Y'all take care. Have a great week. I'll be back on Friday. Market breakdown as always, 11 a.m. Central Standard Time, 12 p.m. Eastern. And then we will be back next Wednesday. We're going to be back 11 a.m., right?
Yeah.
12 Eastern, time. 11 a.m. Central here. So hopefully we'll see you guys then. All right.
All right. See you, Chris.
Everybody take care. Thanks a lot, Tillman. Appreciate you guys.